Yesterday afternoon, Evergrande's billionaire chairman was summoned to an emergency meeting with the Chinese government, and control of his crisis-hit Chinese property development company was handed over to a local government working group. Then late last night, top regulators in Beijing published coordinated statements in an effort to calm nervous markets after Evergrande told investors that it may not be able to meet its financial obligations. What's up everybody, this is China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's #2 economy. This is a special short episode looking at these developments from yesterday, what it means for the Evergrande crisis, China's housing crisis generally, its economy, and of course, the flow-on effects for the global economy. Let's jump in. Yesterday, the provincial government of China's Guangdong province, where Evergrande is based, summoned the China Evergrande chairman after he had expressed that there was no guarantee it would have enough funds to meet financial repayment obligations. A local government spokesperson said in a statement it would send a working group to the company to, quote, oversee risk management, strengthen internal controls, and maintain normal operations, end quote, and that it is, quote, highly concerned about China Evergrande's announcement, end quote. This marks the formal beginning of Evergrande's restructuring. What we will likely see next, if the last few years of case examples, for example, Baoshang Bank, is any indication, is the forced extension and partial restructuring of liabilities aimed at forestalling the recognition of large losses. The local government is moving quickly to reassure investors after the massive debt-ridden property developer said in a filing to the Hong Kong Stock Exchange it had received a high demand from creditors to pay about $126 million, but that, quote, in light of the current liquidity status, there is no guarantee that the group will have sufficient funds to continue to perform its financial obligations, end quote. Regarding its huge offshore debt obligations, it also expressed it intends to actively engage with creditors to, quote, come up with a viable restructuring plan, end quote. Things did not stop with the local government of Guangdong either. Late yesterday evening, the People's Bank of China, China's central bank, and the China Banking and Insurance Regulatory Commission both released statements to assure spooked investors that the situation is under control. For example, the People's Bank of China expressed that, quote, short-term risks caused by a single real estate firm will not undermine market fundraising in the medium and long term, end quote, adding that, quote, land purchases and financing have returned to normal in China, end quote. The China Banking and Insurance Regulatory Commission said the Evergrande issue would not affect the industry's normal operations and it would increase support for guaranteed rental housing. If you'd like some background about the Evergrande crisis and how we got here, I'd highly recommend hitting this video up here where I give an in-depth explanation of how we got there. But first we have more critical information to cover here. In 2020, regulators put borrowing restrictions directly on property developers with the 3 red lines policy in order to force the highly over-leveraged housing development sector to deleverage. This was a serious blow to many developers who lost access to cheap credit critical to their operations. Late this year, Evergrande shocked the entire market by missing a payment, triggering a wider crisis in the over-bloated property sector, which we are now witnessing currently. Evergrande is already late on $82.5 million worth of coupons that were due on November 6th. It faces another $366 million in interest payments on its onshore and offshore debt by the end of this year, and it has almost 2 trillion RMB, 308 billion in total liabilities, with some 240 billion RMB, approximately $38 billion in borrowings that have to be paid by June next year. As we discussed in yesterday's episode, Evergrande is not the only Chinese property developer facing crisis this week. There are 3 other property developers that have had a very painful week. By the way, guys, if you enjoyed the video, please hit that like button. It is the only way that a small channel like this will be recommended by YouTube. So if you do get some value, please hit that like button. It's a huge help. Let's continue. Chinese property developer Fantasia Limited has been forced to sell 2 major projects, one in Beijing, the other in the Zhejiang port city of Ningbo, in order to raise funds to meet their financial obligations. Guangzhou-based China Evergrande Group has failed to meet its payments too of $651 million. Yesterday, its stock fell 12%. This week, it saw 2 downgrades from Standard & Poor's and Moody's and 3 downgrades from Fitch. The company has about $600 million in payments due in late January. And also this week, offshore bondholders in Kaisa Group have rejected an offer to extend maturity of its debt to avoid default next week. Now all eyes are on the developer to see whether they can meet their obligations next week or default, throwing the already crisis-hit Chinese property development sector into more chaos. All this is to say that this crisis does not just end with Evergrande. It is a much deeper and more difficult problem to solve, and we'll be following these developments and developments in the Chinese economy going forward. So if you want the most up-to-date analysis on China, maybe consider subscribing, hit the notification bell, and you'll have these episodes as soon as they're released. Throw your comments below, guys. I always love hearing from you. And if you want to hear this in audio form, China Update is now in podcast form. Search for China Update on Spotify or Apple Podcasts, and you should be able to find these episodes, which go up the same time as these videos. That's this episode. I'll see you guys next time.